Corporate business remains a major revenue driver for the hotel. From a finance perspective, how important are corporate accounts? Corporate accounts are extremely important because they provide stable weekday occupancy, predictable revenue streams, and stronger long-term business relationships. In many cases, corporate demand also supports banquet, meeting, and ancillary revenue opportunities. From a financial perspective, high-quality corporate accounts help improve business visibility and reduce dependency on heavily discounted transient channels. However, profitability must still be monitored carefully because negotiated rates and volume commitments can sometimes create margin pressure. What expectations do business travelers typically have today? Business travelers generally prioritize efficiency, reliability, and convenience. Fast check-in, stable high-speed internet, workspace comfort, and consistent service standards are now considered essential rather than optional. Many corporate guests also expect flexible cancellation policies, loyalty program benefits, and seamless digital experiences. In luxury hospitality, responsiveness and personalized service remain key differentiators, especially for frequent travelers and executive-level guests. How can hotels strengthen loyalty among corporate clients? Client retention depends heavily on consistency, relationship management, and long-term value creation. Hotels should focus on maintaining strong communication with corporate accounts, understanding client travel patterns, and delivering reliable service experiences. In addition, loyalty programs, preferred negotiated rates, and customized corporate solutions can strengthen long-term partnerships. From a financial perspective, retaining existing high-value corporate clients is usually more cost-effective than continuously acquiring new business. What trends are currently changing business travel demand? Several important trends are reshaping the corporate travel market. First, hybrid working models have changed travel frequency and booking behavior, leading to shorter but more focused business trips. Second, companies are becoming more cost-conscious regarding travel policies and negotiated rates. Third, digital meeting technology has increased competition between virtual and in-person events. However, face-to-face meetings, conferences, and relationship-building activities continue to drive strong demand within premium hospitality segments. Should the hotel invest more aggressively in MICE business? Yes, I believe MICE remains one of the strongest long-term growth opportunities for the hotel. MICE business supports weekday occupancy, banquet revenue, catering income, and overall property utilization. In addition, well-positioned MICE events often generate higher ancillary spending compared to transient guests. However, investment decisions should remain disciplined and focused on profitability, operational capacity, and long-term market demand. Strategic upgrades to meeting facilities and event technology could strengthen our competitive positioning significantly. Some corporate accounts are requesting lower negotiated rates. How should we respond? Rate negotiations should balance volume opportunity, profitability, and long-term account value. While competitive pricing is important, aggressive discounting may negatively impact ADR quality and overall revenue strategy. We should evaluate each account based on total contribution, including room nights, banquet potential, loyalty value, and payment reliability. In some cases, maintaining rate integrity may be more beneficial than pursuing lower-rated volume business. Corporate guests expect premium service but often negotiate aggressively on pricing. That is definitely a common challenge within luxury hospitality. Corporate clients increasingly expect both competitive pricing and elevated service standards. This is why operational consistency and service quality become critical differentiators beyond pricing alone. Strong client relationships, reliability, and seamless experience delivery often play a major role in retention and long-term account growth. What should be our top corporate business priority next year? I believe our top priority should be strengthening high-quality corporate and MICE business while protecting profitability. This means focusing on long-term account relationships, improving direct corporate partnerships, and enhancing service consistency for business travelers. At the same time, we should carefully manage negotiated rates and channel mix to support stronger ADR quality and GOP flow-through. Sustainable corporate growth requires both commercial competitiveness and operational excellence. Should we prioritize corporate or leisure business? I believe the hotel should maintain a balanced business mix rather than relying too heavily on a single segment. Corporate business provides stronger weekday occupancy stability, predictable booking patterns, and long-term account relationships. On the other hand, leisure business often delivers stronger ADR opportunities during weekends, holidays, and peak travel periods. From a profitability perspective, the ideal strategy is optimizing segment mix based on seasonality, market demand, and revenue quality. Diversification also improves resilience during changing market conditions. Can negotiated rates increase next year? I believe selective negotiated rate increases are achievable, particularly for high demand periods and strong performing accounts. However, pricing strategy must remain aligned with market competitiveness, client value perception, and overall business relationship strength. Corporate clients are becoming increasingly cost-conscious, so rate adjustments should be supported by service consistency, operational reliability, and value-added offerings. In some cases, strategic account segmentation may allow us to increase rates for lower volume or less profitable accounts while protecting key long-term partnerships. How profitable is MICE business? MICE business can be highly valuable because it generates multiple revenue streams beyond guest rooms alone. In addition to room revenue, MICE events often contribute significantly through banquet operations, catering, meeting room rental, and ancillary spending. It also helps strengthen weekday occupancy and overall asset utilization. However, profitability depends heavily on pricing discipline, operational efficiency, staffing control, and event complexity. Large volume business can drive strong top-line revenue, but margin quality must still be monitored carefully. How do we retain key accounts? Retaining key accounts requires consistency, relationship management, and long-term partnership focus. Clients generally remain loyal when hotels deliver reliable service, responsive communication, and operational flexibility. Regular account reviews, proactive engagement, and understanding client business needs are also extremely important. From a commercial perspective, account retention is usually more cost-effective and strategically valuable than continuously replacing lost business. Should loyalty incentives increase? Loyalty incentives can be very effective when structured strategically and aligned with long-term revenue objectives. However, incentives should focus on strengthening guest engagement and repeat business rather than simply discounting rates. Personalized recognition, flexible benefits, and value-added experiences often create stronger loyalty impact than purely financial incentives alone. The key is balancing guest retention with profitability and overall revenue quality. Are corporate rates hurting ADR? Corporate rates can create ADR pressure if pricing strategy becomes too aggressive or overly volume-driven. However, strong corporate business also provides occupancy stability, forecast visibility, and long-term revenue consistency. The key is evaluating total account contribution rather than focusing only on room rate. Some corporate accounts generate substantial ancillary revenue and strategic business value that supports overall profitability. Therefore, negotiated rates should be reviewed based on revenue quality, business volume, and long-term partnership value. How should weekday demand be optimized? Weekday demand optimization should focus on strengthening corporate, MICE, and premium business travel segments. Dynamic pricing, targeted account management, and stronger direct corporate partnerships can help improve weekday occupancy quality. In addition, hotels should analyze booking pace, market segmentation, and channel performance carefully to optimize inventory allocation. The objective is balancing occupancy growth with ADR discipline and overall profitability.